So hi everyone, I'm here with Paul Josephac, who's the CEO of Receive, and they do a lot of work in the digital space and got a lot of expertise around digital machine learning and some of the pieces and collections. Welcome, Paul. It's really great to chat to you. Thanks for being here.
Thanks for having me.
So I think first off, I'm kind of interested in terms of some of the things you've been seeing through COVID. I mean, obviously, it's affected all of us across the world, and I'm quite interested in your perspective in terms of what you've seen in the markets you've been operating in.
So it's kind of gone up and down. So we're almost 9 months kind of into the pandemic. What ultimately happened on our end right at the beginning was pretty much deer in headlights effect. Most people didn't know what to do. So kind of everything slowed down for quite a bit. I think a lot of companies were just extremely focused on regrouping, kind of adapting to the work from home situation. We had a couple of partners where, they had to get 4,000 people into a home office. That doesn't happen overnight. So basically, everyone kind of reverted to very specific core processes. Things went quiet for a little bit. But then I would say kind of throughout late spring, summer, things started to normalize as much as they could, with a lot of countries still going in and out of lockdowns. So I would say the industry, or my specific industry, was very quiet, almost paralyzed for a little bit. Then people kind of started realizing, okay, we're gonna have to adapt to whatever. I hate using the word new normal, but adapt to the new normal. And then I would say kind of like September timeframe, things started picking up. So again, a lot of people realized, our industry specifically, that there is going to be an upswing, whether you like it or not. As much as the pandemic is net very negative for society and for business, at the other end of the spectrum for collections and pretty much lenders and whatnot, there is quasi a little bit of a silver lining. We definitely see customers of ours preparing for the future and realizing that if they don't take the digital approach and don't automate workflows and don't take a very kind of technology-centric view, they feel like they're going to be left behind. And I think that it was a wake-up call. So in a sense, the industry, whatever you want to call it, everyone was forced to wake up. Everyone had to digitize overnight. And what would have taken 10 years, we've all heard the cliche saying 10 years in 3 months. I think it's very much something that we're seeing, but very positively, people are starting to react. I thought they might wait until next year, but we saw kind of Q3, Q4, people were already being responsive.
And has that made a big change in terms of people's budgets internally, in terms of clients and in like investments in digital and those kind of things? I mean, how much has that changed? Because collections was always down the bottom in terms of investments, and it feels like that's sort of changed really.
Well, if you kind of think about it, I mean, collections has always been seen something buried in the basement within the accounting department. And once a lot of these businesses started having to think about their cash flows and just basically making sure that they got the money that was basically booked as revenues collected, it's one of the easiest ways to go about solidifying your business and your bottom line. So the focus switched to an extent to kind of looking at the cash flows and asking, how can we accelerate that? At the same time, there were so many different effects because of COVID when it comes to the lending and collection space. So what ultimately happened is that initially a lot of people started saving heavily because they didn't actually have expenditures. So I'm sure you've heard this from other people, in the sense that because we were all home, people weren't going out to eat, they weren't buying cars, they weren't basically purchasing luxury goods. So that actually led to a quasi upswing in terms of savings. What a lot of people also did in the collections world, or what affects the collections world, is that because all of a sudden they had this free cash flow, they were paying down their debts. So the industry in and of itself profited short term, in the sense that a lot of people were willing to step up and kind of just pay down what was outstanding. I think after a certain amount of time, obviously reality hit, and people weren't able to pay their rents. They weren't able to kind of live their lives as they did 3 or 6 months ago. Then again, they weren't necessarily paying down any debt that they had, or catching up on their collections issues, or accounts that were in arrears. And I think that's obviously just a swell that's growing right now, because towards the end of the year, once all these kind of payment holidays, mortgage holidays, all these quasi postponements of due dates, once that all catches up, which will most likely be the case by January 1st of 2021, then you're going to see kind of the real effects of COVID from 2020. And I fear quite a bit for the economy in general, that there's a lot of people, I don't know about Europe as much, but in the US, for example, there's a ton of people who didn't have even 3 months savings on their accounts. So there's going to be a big mess coming. And again, for the collections industry, it's an opportunity, obviously, but then also the question is, what are the recovery rates? will you be actually able to collect?
Yeah, I mean, so I think all the government stimulus or the government help seem to really sort of like suppress delinquencies in the short term, like over the summer, and then the question is just like when does it come back? I think over here in the UK we were thinking it was really going to be the end of the furlough period, but that's now sort of been, the can's almost like been kicked down the road probably till
Exactly.
certainly January, if not sort of March, and it's a lot, although it's sort of starting to trickle in, it's just when does that big wave come through?
Yeah.
I think in the background.
I think it's an inevitability. The question is when. I mean, I've even heard some some predictions that it might even be the middle of next year, that it could really be kicked down the road for quite a while. I mean, obviously, a lot of these governments are in a position to do so, but at some point, you're going to have some rational thinking kick in, and people will have to start thinking about, how much of a wave are we building up, and then ultimately, does it lead to tons of insolvencies where the collections industry isn't even able to collect on a lot of these payments? So it's a balance.
Yeah, and what about the segmentation of the almost like the of the books, right? Because it's almost like this. It feels almost like it's cut the population in a different way than it traditionally would be, right? So normally it would be based on let's say your bureau score and sort of like the traditional kind of indicators, and a lot of those things have kind of changed now. I mean, you had people who were had really stable jobs, let's say they're in the hospitality industry, they had a really great business and they've just been decimated, it feels like. And yet you've got other people in got stable jobs, let's say for example public sector is a good example, seems much more stable, and it's almost like they've saved money, as you say. I mean, how do you think it's best to kind of react to that in terms of that recutting and segmentation of the book, particularly in collections?
Perfect storm, as you mentioned. Let's say you're in the hospitality industry, you just purchased a house, took down a lot of debt for it because the interest rates are so low. You might be house rich and cash poor, right? I mean, at the end of the day, anyone who's in that kind of a situation is obviously going to have an issue because they're going to run out of cash. What I think is going to have to happen is that regardless of what the governments are doing, I think there's going to have to be a lot of almost compromise from the private sector, in the sense that if you want to make sure that your customers are able to be your customers 12 to 18 months from now, you may have to kind of look at how can you potentially work together with them. I mean, that's a little bit kind of what the whole collections industry is kind of facing right now, where taking a customer-centric approach to your customers means that you have to work together with them and work on potentially setting up installment plans, lending them capital so that they can actually stay focused on what they need to do, which is basically funding their core lifestyle, or not even lifestyle is the wrong term, right? Just basically their life, paying their rent, buying food, and keeping the family going or whatnot. So it's almost difficult right now to say where that hit is, because you and I could almost posit, yes, of course, someone in the hospitality industry who just bought a house, but there's going to be a bunch of kind of follow-on effects, which also won't kick in. I mean, again, travel or hospitality, whatever happens there, it trickles down to other industries, and you're going to have kind of a staggered effect where multiple segments, which might not be hit immediately, will ultimately at the tail end also be hit. Whereas at the front end, people might be recovering to an extent because they've decided to switch industries or whatnot. I mean, we're thinking in 12-month cycles at this point, if not longer, to an extent, right? I mean, all the fallout of the pandemic isn't captured and wiped off the table within a year.
Yeah, so it's interesting. So it's not just the immediate effect you're saying; it's also then it's the knock-on effect and the knock-on effect and the knock-on effect, and that almost like that.
Oh, yeah.
That complexity becomes complexity squared or cubed. It becomes very difficult to kind of predict what's actually going to happen.
Absolutely, and that's the challenge, right? Because you also have to ask yourself, kind of, when does one go up and the other go down? Because you have to plan over a much longer cycle, and I think that cycle of recovery is not 1 or 2 years. We're looking 3, 4, 5, 6, 7 years out in terms of all of the knock-on effects of what's going to happen. Because if you just think about hospitality, restaurants, hotels, and whatnot, once one of those businesses is out of business, I mean, it's not coming back quickly. And then the effect of just simply basically the residential the commercial real estate where that restaurant or hotel is. And then, these are cycles that take much longer to play out. So,
and how do you think the collections industry should react to that? I mean, obviously we tend to be, front and center in terms of talking to these folks or dealing with these folks. I mean, obviously we've got forbearance plans that are in, we've got the various sort of treatment plans that are in, but do you think there's any sort of secret sauce, anything new that we need to think about, from before versus before?
I mean, the focus has to be on resolution via
Mm,
compromise of some sort.
mm,
I think you have to be pretty creative in terms of what you offer anyone who's in arrears
mm,
as a solution. Because again, if someone doesn't have the cash, what are you going to do?
mm,
At the end of the day, you're going to have to figure something out. So I think there's going to have to be a lot more of quasi versus kicking the can down the road, finding a solution that allows for a midterm to mid to long term resolution. Because you simply can't, basically write everything off
mm,
or take everything to court. I mean, at the end of the day, you're also going to have to make the decision of do you take someone, for example, in a collections process into a legal process with the respective costs that are attached to that,
mm,
knowing well that you won't be successful, and who even knows what kind of happens regulatory wise next year. I'd be quasi pretty foolish right now to try to predict, what are the governments doing 12 months from
mm,
now when everyone is hit by this. A lot of
mm,
us kind of in the situation where you and I are interacting, we're not maybe blowing up around this right now, but there sure is a lot
mm.
of people that we're not interacting with that are already kind of in the midst of it. And
Yeah,
so, you might just have this wave that is also then via some regulatory changes, being held up. And my
yeah.
my thought is that the industry, I think the question you ask of what needs to be done. I mean, I'm always a big proponent of digitalization. I mean, everything that you can digitize, which allows kind of significantly more to be done, obviously should be done. But that's nothing new. I mean, the whole industry knows that it has to digitalize and automate workflows. I mean, that's just a no-brainer right now. But I think you have to also become creative about how you interact with anyone in arrears, and I think that's where certain products might even show up on the market that we don't foresee right now. There
Mm,
might be a whole new kind of wave of lending, which is targeting a very different approach to lending, right? And who knows, what the governments do next year or the year after. So I think there might just be opportunities in the industry in terms of thinking outside of the box. What that is specifically, I think it's very difficult right now to say what it's going to be.
mm. And what about so digital? You mentioned around digital and sort of putting digital processes in place. You've obviously got a lot of experience around that. I mean, how have you seen in terms of like take up from a consumer point of view? I mean, do you think that's really sort of helped the adoption? In terms of like I suppose adoption from end clients and end customers really using
Mm.
it and getting more used to it. So I mean, you're seeing different levels of take up rates than you were before.
Well, I mean, it's almost chicken or egg, right? I mean, at the
Mm,
end of the day, there was a huge shift that was going on in the collections world anyway, because of a shift in demographics and the fact that almost everyone has gone to mobile
mm,
or quasi online devices. And let's put it this way: over the last couple of years, I mean, obviously, making sure that the end customer is given the opportunity to pay using the
mm,
modalities that they like to use and that they're comfortable using, the industry simply hasn't caught up to that. You're still in a
yeah.
situation where people have to sit down, go to their PC, put in a 14-digit IBAN code, which is the most ridiculous way of paying anything. So we're seeing, for example, with our technology, where we give multiple modalities and give the end customer a very simple way of paying. And depending on country, it could be something completely different, right? So, for example, in the Czech Republic, it's a QR code, which moves
Yeah.
the needle significantly in a very short amount of time. In other countries, it might be a different type of payment, be it credit card or be it PayPal or something. So you see the immediate effect of that when you give it to a customer like ours who hasn't had it. I mean, the uptake is enormous because you see kind of things being paid within 24 hours that normally would have taken a couple of weeks, and the
Mm,
cycles of up to 120 days can be reduced down to 7 or 14 days,
mm.
and that's just by giving the end customer kind of what they want, and also making it as easy as possible. I.e., they can open something up on their mobile phone and click a button and pay. I mean, it's as simple as that, but a lot of the industry hasn't caught up to that yet.
And do you see are there different behaviours in different markets? So you mentioned the Czech Republic there. I mean, is it? Do you think there's different ones that are popular in different countries? And do you think it will sort of combine into like the same kind of approach? I mean, will we reach sort of a common kind of approach? Do you think?
I think down the road, yes.
Mm,
We'll all be paying with Bitcoin. I mean, that's I kid. I definitely don't think that we're all going to be paying with Bitcoin, but you see a lot of differentiation based upon, I guess, also the sophistication of specific countries, or just kind of the historical growth. So in the Czech Republic, as an example, half of the population is completely modern in the sense that they live their lives on a mobile device. They skipped the
mm,
PC and went right to mobile because of the penetration of mobile networks versus
mm,
landline. So that's something that happened in the last 20 years. But you also kind of see in the Czech Republic, for example, that there's a way of paying where you basically go to your local post office, bring cash, and then the post office wires the money. It's a very rural
mm,
rural population, and I actually come from Slovakia originally. So if you look at Slovakia or the Czech Republic or a lot of Eastern European countries, in the main cities, the capitals, Prague, Bratislava, Budapest, and Hungary, they're very sophisticated. Everyone has a mobile device. Everyone is used to using apps for payments and whatnot. Once you get an hour outside of town into very rural farm country, let's call it that, people are still forced to go to the post office, and because they don't have a computer at home, or they're not used to using a mobile device for things. So you're going to have certain countries that are going to be adapting things slower, others faster. If you go to Scandinavia, everything is so digital, and it feels like it's miles ahead. I think it'll take a while for everything to quasi equalize throughout Europe, for example.
What about digital and data? I mean, digital gives us the opportunity to get a lot more data and then really use that to sort of drive experience, I think. I mean, what have you seen with that, and what are the benefits? Because that allows us to do new things.
If you think about it, sorry to interrupt. If you kind of think about it, I think I understood your question properly. I mean, once you have these massive amounts of data that you can harvest, because the data's been there, but it just, I would say in the last 10 years, they could have been, or the industry in general could have been taking advantage of this data, and it hasn't. What I'm going to say is that all this data that's basically there in terms of the transactions, once you start harvesting it, you can just basically take the amount of transactions which generate that data and already start optimizing with very simple pieces of the process, right? So a lot of people talk about AI in general, and when you think about AI, it's basically, the machine thinking for itself. We all have kind of from movies and films and whatnot, this vision of what AI is, but there's a very long-term intermediate step called machine learning. That's the dirty secret of AI, that anyone who knows what they're talking about knows that it's just machine learning. If this, then that is pretty much the dirty secret. But once you start doing that, I mean, we see that alone with our technology. If you see a specific behavior, and then you can have the software adapt automatically to it. Some demographic pays at a certain time. Well, hence, then the software should obviously trigger that messages are being sent at that time to that demographic. It's not rocket science, right? But it's just not being done. If you think about that in the typical collections process, that process is kicked off with a physical letter. And even in that situation, you're just not getting as much data as you could if you were to send an email in comparison. Physical letter, you don't have any confirmation of it being delivered. With an email, you can still see if that email was delivered and if it was opened. Right there, just that piece of data allows you to start kind of testing different approaches as part of your collection strategy. And
so last year, at least over here, there was a lot of noise around, or a lot of discussion, I would say, around AI almost like as a banner that was used, and you sort of explained a little bit about machine learning. But do you think there's special, almost like use cases that are best in collections to look at? I think we'd looked a little bit around sort of almost like contact strategies and decisioning strategies or segmentation. But do you think what's your view around where's best to focus first? It's got the biggest almost like bang for the buck.
Well, I think the segmentation probably plays the biggest role in the sense of that you can actually speak to your end customer based upon their behavior. I always like to use the example of the 45-year-old executive or the 21-year-old student. There's there's worlds in between there, and how those two individuals will ultimately behave, and being able to segment around those details and then adapt automatically the content as well as the communication channels. Because again, it's what we're doing, for example, and a lot of other people are trying to do, is that they're trying to adapt the content at point of so to speak, injection into the process, i.e. right now, a lot of times the content is pre-configured. There'll be multiple templates used, but ultimately you can have thousands of, if not hundreds of thousands of templates that can also be dynamically sent out as needed to a respective segment. And then also the timing around that, again, just based upon time of day when you send the communications out, followed by look and feel. Again, certain people are going to react more to certain channels, be it WhatsApp message versus an email. There's also kind of a look and feel aspect to that. Right now, it seems kind of very touchy-feely is the term I like to use, but it ultimately can all be analyzed, and you can see if certain things work better. And
it's quite interesting on test and learn. I mean, so it's like test and learn's been around for quite a long time. So you try different strategies, and they usually play out. Then you learn from them, you adopt one. I think what's quite interesting, what you're saying, is almost like, how do you do that? And if you look at the fintech world, do A/B testing on a much more massive scale, and with much smaller changes, like types of presentation of a document, or slight wording changes, those kind of things, and do that almost like on a much more sort of almost like industrial type of scale, which is machine learning, I suppose.
Well, of course. I mean, yeah, and I mean, think about it even a step further. I mean, I don't look at building my own company based upon the processes of a large DCA in Europe. I actually look at Facebook and say, well, how's Facebook learning to basically serve the messages on your Facebook stream? I look at it more from even almost like a marketing perspective. All of the marketing technology that's been out there for 10 years is doing exactly that. It's basically testing and then delivering basically what works. One thing that I would add to the testing aspect, though, is that don't forget that right now, if you look at the testing that could possibly be done with the current processes, you could throw 3, 4, 5 variables into the equation. Once you do it completely digitally and your processes are automated, you could be throwing thousands of variables at the algorithm. And that's where the difference comes. And I mean, if you think, I like using the Facebook model. Facebook can test everything because they have billions of transactions, or not even transactions, but kind of interactions happening on your screen. And think what you will of Facebook. I'm not the biggest fan, but at the end of the day, they've become so sophisticated in terms of targeting everything that happens. And this is basically QA testing, right? I mean, it's basically going back and forth and seeing what works and sticks and what doesn't. You still have enough transactions in a collections process as well to learn as quickly.
And how do you think about it? So a lot of clients or a lot of creditors will have quite low volumes, and so how do you think of that in terms of like creating the volumes to be able to do that? So I mean, the more data, the more meaningful it's going to be. If you've got a relatively small number of accounts, or a slow number of people, a small number of people in collections, I mean, how do you sort of adjust that? Do you think you'll be able to share some of the principles across different creditors?
I was about to say it's the only chance is network effects. I mean, and again, network effects have been around for 30 years, but the collections industry has absolutely had zero benefit from it because everyone's in a silo of their own business. And be it the enterprise or the DCA, who have basically some kind of technology on the back end, it's completely siloed in their organization. Once you have providers like ourselves who are creating a platform where multiple parties are using that platform, there's obviously a network effect based upon the data that everyone is collecting. And I'm not talking about like specific data to individuals, but behavior and segmentation and whatnot can flow across the platform and create that network effect, which you right now don't have. You have too many incumbents who are basically completely siloed around the few customers they have. Or conversely, your use case where you say someone's small and they might have a couple hundred claims per month, they're not going to get the benefit of implementing a technology to then harvest the data. They need to tap into a network to get the network effect.
So one of the big questions there was around machine learning, or AI as it's being termed, was around explainability. So that's been quite a big topic of discussion, certainly over here, actually, I think everywhere. I mean, what's your view on that in terms of like how best to approach that? And I think one of the concerns is really around like if you're making machines to make decisions, if you're using the algorithms to make decisions, at some point you have to get through to a human as well. So I mean, and I think that's the fear that's really going on. How do you feel about explainability and sort of transparency and those kind of things? What's the best approach?
Do you mean to the users or to the end customers? Because the end customer should never see it, right? Ultimately. So to the actual purchasers of such technology, let's put it that way, my clients, I think the explainability is still a hurdle. So there's definitely a fear. I think fear is the right word in the sense that if I let the machine take over, it might ultimately start doing something that I don't want, that I could also have probably legal repercussions for. What I think you have to do is you have to do an interim strategy, which is what we pursue. We want to basically make it as transparent as possible, the way the strategies are set up. And then piece for piece, allowing the AI to take over more and more of the process. I think you have to learn your way into it and become comfortable with kind of the performance. And at the same time, you also have to track it and make sure that you understand exactly what's happening. And not from a technical perspective, but simply from making sure that you're not, for example, in a country where you're not allowed to send a WhatsApp, and all of a sudden the algorithm decides to start sending WhatsApp in that country. You have a major issue as a user of that technology. You have to make sure that you're comfortable with the decisions that the software makes and the algorithms ultimately make, so that you're comfortable letting more and more of those processes be steered by the AI.
I mean, I think it's interesting, but there's also a little bit to the end consumer as well, which is almost like the transparency and the explainability piece feels like it's holding back some of the mathematical techniques. So, for example, neural network seems quite held back by that, because it's kind of like, well, it's gone into a black box. Do I really know how it's coming out? And it's going to give me a decision, particularly around lending decisions, or particularly around where the hard decisions in terms of, and mathematically it probably does better describe it, because that's what the maths and the stats will say. However, I think there's a fear around that, and so people seem to have almost like it's held back neural networks as almost like as the algorithm, and sort of gone into things like random forest and those little things that are just a little bit easy to explain, because you've got decision trees as an example. And I just wonder if we'll ever if we'll ever be able to use that, or do you think it's going to hold it back longer term, or does it limit where it needs to get applied?
I think we get there eventually. The question is, what's the timeline to get there? I think there's going to be a lot of fits and starts kind of until then. And I also think there's also certain things where you have to simply kind of determine at what level do you let the machine take over. If it's a low value claim, let the machine kind of make the decisions. If it's a high value claim, steer kind of far early into the process into a human interaction, for example, especially if it comes to some kind of an installment plan that's being offered or whatnot, which ultimately indirectly is lending, right? So what you want to do is you want to actually put kind of stops and starts into the system that allow kind of at a very early stage right now for things to kind of diverge into a path where there might be a human interaction. If it's a low value claim or interaction, then you can let it, completely run, so to speak, autonomously. I think that's going to be kind of the interim step where you're just going to kind of also segment by value, and everything that's very low value will completely be steered into a self-service path without any, opportunity to get anyone on the phone. Conversely, if it's something that's of more value, or even maybe not necessarily financial value, but customer value, where you throw that. I mean, I think down the road, I mean, let's take a little step back from collections. One of my theories about customer service in general is that we're now also evolving into a era where customer service might be the differentiator in terms of human customer service, right? I mean, there was all these examples of the last 10 or 20 years where some retailer did something in a customer service type of a situation of, whatever, the clothing store that took back winter tires just because they were so trained about customer service that they let someone return winter tires, although they didn't sell winter tires. I think there's going to be a differentiator going forward where certain businesses, by actually letting you get someone on the phone and talking to you, will be a differentiator versus your competition, where you're just forced to go through some kind of automated processes. And hence, I think that you're going to have the segmentation based on the actual customer value and relationship, or whatever you want to call it, lifetime value. That will also keep a lot of these processes at bay, because they'll simply say the customer will reject it if they feel improperly treated by the machine.
Yeah, it's almost like you'll have the value end, which will be much more automated, but then people pay a premium for really good service.
I mean, look what you do now in certain instances, right? I mean, you're already right now, if you buy a car, or this in certain industries where you get the VIP or a premium type of service where you're basically having everything taken care of. I think that ultimately is going to happen around banking, lending, and whatnot. People are just going to say, I'm a VIP customer, so I want VIP service.
I think it's really interesting, even just looking at like these video calls, right? We've got so much more used to video calls over the last like 9 months or so. And I just think about the kids today who are doing this natively, right? So I mean, this is what they'll grow up doing in terms of these things, and then what's going to happen, and it becomes almost like a bit of a generational divide in terms of before and after. Sure. I mean, we've adopted it, but the new kids coming through, I mean, they just do this naturally, and it's not just about replicating what went before as much as now there's new opportunity, and you can do things very differently. You can talk to people, across Europe, across the world very easily. I mean, it's new opportunity, really.
It also creates all kinds of different ways of interacting. And again, I mean, back to the collections world, if you think about the fact that you could almost get someone into a video call versus just a regular unfriendly normal call, there is a certain customer service aspect to it, where if you actually get a physical person talking to you, there's a certain amount of, I mean, especially if you see that they're trying to help you, right? In a very kind of, let's call it charged situation, if you feel that the person on the other side really actually cares about helping you, that can move the needle quite a bit. And it might then be a very high value interaction with the customer. And because that customer is used to it, I mean, think about even 2 years ago, if someone actually video called you, most people would be like, what's this all about? They didn't, no one was doing it. The kids were doing it. I mean, we're all kind of age-wise, we've already aged out of that. The kids now, let's say they're 10, 12, 14, 18 years old, they were all talking via video before the pandemic anyway. We're now just being forced as quasi the old guys to adapt to what's already been the situation in the younger demographics anyway.
Yeah. So I've heard that quite a bit in terms of like, not being out on the road, not visiting people face to face, not being in the office is sort of like, has that damaged relationships from a business point of view? Has it meant that, we're basically relying on relationships that were built pre-COVID, right? In terms of like, getting on with people. And then I've had a contrary opinion, which was really around saying, well, look, these video calls actually really help, and actually it's short video calls that help as much as trying to replicate what we did before. So you can do it, but you have to do it in a different way. I mean, you got a view on whether the face-to-face helps, or can we replicate it with video?
So my background over the last 25 years of my career has been extremely network driven, right? I came out of the investment side, so I was a venture
Mm,
capitalist for years. Now I'm back to quasi running a startup, which still in and of itself is all about networking, right? Ultimately finding customers, partners, employees.
mm,
It's all about the network. I feel extremely, so to speak, how do I put it, privileged to have an extensive network that I built up over 20 years. So
yeah.
the fact that everything is now switched to video, I already have that existing network, which I can always fall back on. I do ask myself, if someone is right now kicking off their career, which, like, for example, a lot of my employees are doing right now, who don't bring that network with them, it's extremely difficult. So exactly what you said, that building out that network just using video, attending virtual events and whatnot, you don't have any of that serendipity effect, right? I
Mm,
mean, over the years of the conferences that I've gone to and the lunches and dinners that I've gone to and people that I've met and kind of just random introductions that you don't get in a one-to-one call, right? How many times I've been standing at an event with someone I know, someone else walks by, that person grabs them and says, "Hey, you got to meet Paul."
yeah.
I think that right now, you and I might not even be seeing what's happening in terms of the way people are building networks using the available technology. So just again, another example. There's a software or a service called Lunch Club, I believe, where
Mm,
you can just do random meetups. You put in your interests and you get kind of introduced to people, and you do a quick
mm.
half-hour call with them. I do two a week using that technology just for people in the industry, trying to just keep my network kind of stable or growing. It's one of the kind of things that showed up in the last, let's say, 6 to 12 months, where networks are being juiced in the sense of trying to make things grow.
I think the serendipity is quite interesting. If you go back to the modeling piece as well, which is like
Yeah,
it's kind of what you build in as well. Otherwise, you get like local minimums and also all of those kind of things as well. So it's
of
kind of like
course.
it's almost like
Yeah.
we're having to replicate some of that actually in real life, right? Uh,
Yeah, I mean, I find that super exciting. And when I actually think about it, is there a way to replicate serendipity that happened in the physical world
yeah.
into quasi an online environment or a virtual environment?
Well, Paul, it's been fascinating chatting to you. I could chat with you for another hour, I think. So,
Likewise,
really enjoyed it. Thanks very much, and really
thank
appreciate
you.
you making the time. So, and hopefully we'll chat again soon.
Definitely. Thanks
Okay.
again.